The forecast of a catastrophic economic crisis, leaving no facet untouched, echoes the warnings of Charlie Munger. The 99-year-old billionaire and vice chairman of Berkshire Hathaway, Inc. has raised alarms about the United States moving towards yet another fiscal crisis. A visionary voice, his prediction of a comprehensive collapse sends ripples through industries and markets. It could be contended that the extreme indulgences of the 1920s led to the Great Depression, which in turn paved the way for Hitler's rise. This is a grave matter, though not easily accepted. Many are drawn to chaotic conflicts, and presently those are the individuals prevailing, while some are profiting from our turmoil. The concept of obtaining greater value than the price paid defines investment. To achieve success, you must consistently acquire more value than your expenditure. This principle remains perpetually relevant. Nowadays, a group of individuals mindlessly recite stock quotes without understanding their investments, which isn't beneficial. Reflect upon historical extravagant surges like the South Seas bubble and the late 1920s bubble. These occurrences have been intrinsic to capitalism since its inception. Such exuberant bubbles have been a part of our economic history. The stock market has transformed into a speculative arena resembling a casino, often disconnected from the underlying stock values. This detachment is the breeding ground for bubbles that inevitably burst. When copious amounts of money are injected into the economy, as seen in the practices of modern nations like Japan, the United States, and Europe, we enter uncharted waters in terms of scale. Despite the extensive money printing, severe repercussions have surprisingly been avoided. Japan, for instance, endured 25 years of stagnation with minimal improvements in living standards, which may not have solely resulted from macroeconomic strategies, but could also be attributed to heightened competition from China and Korea, affecting their export dominance. Before we dive deeper, make sure to hit that like button and subscribe to this channel for more incredible life-changing content. Now, let's move on. In any case, the current situation is peculiar, and the future remains uncertain. It's reassuring that Japan could engage in extensive money printing and still maintain its civilized, composed, and commendable demeanor. We hope for a similar positive outcome for the United States. However, the Japanese might be better suited for stability than we are. The unprecedented nature of our current actions is noteworthy, and we're aware that excessive money printing, as seen in other countries, can lead to severe consequences. While we're nearer to potential problems than before, the extent of their arrival might still be distant. History has shown that unchecked money printing inevitably results in financial repercussions. While Japan has managed to avoid severe consequences from its money printing, its situation might be an exception rather than a predictive model for the future. It's concerning that trouble could be looming. For instance, during the period when Volcker raised the prime rate to 20% and the government paid 15% on its bonds after the 1970s, it led to a distressing recession that endured for a prolonged period and caused substantial distress. We earnestly hope to steer clear of such a scenario once again. The circumstances that enabled Volcker to take such actions without political interference were quite exceptional, and looking back, it was a positive move on his part. In today's context, our current politicians might not be as inclined to allow a new figure like Volcker to take such stringent measures and trigger a similar recession. So, the upcoming challenges are likely to differ from those in the past. We might find ourselves wishing for a recession akin to the one Volcker's approach would bring, instead of dealing with the impending issues differently. It's possible that the challenges ahead could surpass the difficulties Volcker faced and could prove to be more challenging to address. The present inflation is distinct from the type Volcker confronted, and it appears that politicians might not possess the same determination to tolerate economic hardships in their efforts to combat inflation. Volcker was granted the authority to take any necessary measures to rein in inflation, but Powell may not enjoy the same level of freedom in his decisions. The pattern of excessive money printing leading to the rise of strongmen and demagogues has been observed in various Latin American countries. This phenomenon aligns with what Plato noted about the early Greek city-state democracies. The principle of one person, one vote, combined with a focus on equality, can foster the emergence of demagogues who manipulate the population. This has historically resulted in the erosion of democracy. Plato's insight was astute and reflected the reality of ancient Greece, as well as repeated occurrences in Latin America. It's a path we want to avoid. The turmoil brought about by inflation often paves the way for leaders who promise to rescue the population and revive prosperity, which historically has acted as a gateway to dictatorships. Our current situation involves taking significant measures, and the severity of the challenges that lie ahead remains uncertain. The outcome could range from a situation similar to Japan's to something considerably worse. The unpredictability of how events will unfold is what adds intrigue to life. Although we're treading into risky territory, some of our earlier concerns might have been exaggerated. Japan still endures as a civilized nation, despite having engaged in an unprecedented level of money printing by historical standards. The allure of such a scenario is undeniable. Imagine having a collection of interest-bearing debts that you can settle using non-interest-bearing checking accounts. It's an enticing prospect for legislators, as it eliminates interest payments and simultaneously boosts the money supply. The attractiveness of this approach can be almost irresistible. However, as things become excessively appealing, there's a risk of overutilization due to the ease and apparent benefits it offers. Government spending tends to capitalize on accommodating monetary policies, resulting in effortless accumulation of debt without a significant rise in taxation. Munger's cautionary note underscores the fundamental issue with lenient monetary policies. They can cause governments to relinquish fiscal discipline and restraint. Charlie Munger predicts a crash. The challenges we face are genuine, and it's tempting to address them by using tactics like giving non-interest-bearing accounts to clear debt. The appeal lies in the apparent simplicity of solutions. However, the approach often adopted by politicians and the Federal Reserve is to print more money, which does provide a short-term remedy, but leads to substantial long-term risks. The historical example of Weimar Germany, where excessive money printing led to a catastrophic outcome, serves as a reminder of the potential consequences. All these actions indeed carry significant danger and gravity. It's not desirable to have politicians taking the path of least resistance, basing their decisions on the notion that actions that didn't harm us previously can be doubled without consequences. The pattern of continuous doubling can lead us down a drastically different path in terms of governance. There's a definite risk if there isn't a sense of discipline in the process. Although Japan's situation doesn't appear to be in dire straits despite extensive measures, it's uncertain whether the United States will manage its challenges as adeptly as Japan has. When government spending and debt go unchecked without facing consequences, it often results in a cycle of repeated actions driven by political motives. It's essential to recognize that the United States differs significantly from Japan, and the repercussions of our sustained national debt and continuous dollar printing are likely to be distinct. Over the past century, the U.S. has played a pivotal role as the world's economic growth engine, and the potential ramifications could reverberate globally. A pertinent historical example is the combination of factors that contributed to the rise of Hitler. The Weimar inflation in Germany devastated the savings of the middle class and was followed by the Great Depression, creating an environment that fueled the emergence of such extreme political outcomes. The parallel here is that uncontrolled fiscal policies and economic turbulence can contribute to destabilizing consequences with far-reaching effects. The sequence of events unfolded like a 1-2 punch in history. At that time, Hitler emerged as a fervent demagogue, garnering 40% of the votes, which swiftly propelled him into a position of power. Unfortunately, this paved the way for a dictator whose intentions were fixated on plunging the world into the chaos of World War. The historical narrative takes on a distressing tone, considering the gravity of these developments. Remarkably, Germany, which Hitler eventually seized control of, was a highly developed and cultured nation. An intriguing aspect of this period was the story of little Albert Einstein, a young Jewish boy who received his foundational education with the support of the Catholic Church in Germany, a testament to the civil nature of the country. If you find this video informative, like and subscribe to this channel for more educational content. Let's continue. The presence of substantial political risks become evident when a government undermines the buying power of its currency, diminishes earnings potential, and erodes the value of savings. In the context of a Western nation, there exists a vulnerability wherein a charismatic leader can emerge, pledging solutions to the prevailing economic challenges. Such a figure may amass support and loyalty from the populace as they endeavor to enact these solutions. Charlie Munger's prognostications extend beyond mere predictions of a stock market downturn. They encompass a broader understanding of the perils associated with an economic collapse. The implications are twofold. Not only does it highlight the potential for economic turmoil, but it also underscores the looming risk of political instability that can arise as a consequence. Examining the historical trajectory of the Roman Republic provides a cautionary tale about the consequences of prolonged currency inflation spanning centuries that ultimately contributed to the collapse of the entire Roman Empire. Inflation emerges as a paramount and enduring concern, rivaling even the specter of nuclear war in terms of long-term peril. Charlie Munger posits a hypothesis that prompts investors to adopt a cautious stance. Over the next century, the value of currency is destined to dwindle to nothing. Munger's projection isn't as outlandish as it may initially sound. The US dollar's value has already plummeted by over 96% since the inception of the Federal Reserve. A more recent perspective reveals that the currency has lost 86% of its value since the pivotal year of 1971, when the US departed from the gold standard. This sobering historical context serves as a foundation for Munger's assertion, making it a plausible trajectory rather than mere conjecture. The basis of his prediction lies in the unwavering trends of declining purchasing power that history has repeatedly demonstrated. Munger's message serves as a wake-up call, showing the profound dangers inflation poses to savings that aren't strategically invested in assets. A significant portion of his concerns revolve around the domino effect triggered by inflation, rippling through economies and fostering political instability. For investors, it's crucial to diversify your investments across different asset classes, industries, and regions, and maintain a long-term perspective to harness the benefits of compounding. Munger's insights prompt us to reevaluate our financial strategies and seek opportunities that can withstand the challenges that lie ahead. If you found this video helpful, don't forget to like and subscribe for more informative content.